All right. Sorry about that, folks. I had the wrong stream up there. If it's not one thing, it's another. It's the market forecast, ladies and gentlemen. Tuesday, April the 27th. John Hoagland, thanks for trusting me with your time. As always, we're looking for good context, accurate context, good risk management, and patience for all of you. A little bit of a delay here getting started. I do apologize, but we are good to go. Looks like we're streaming now. So we are going to be thinking about economic numbers this morning at 8 o'clock, just now, the Case-Shiller Home Price Index, as well as the FHFA home prices just came out. Where, of course, we have the beginning of the FOMC meeting, a two-day meeting starting today. 9 o'clock today, we have consumer confidence due out. Yes, FOMC two-day meeting starting today. No policy change is expected. Of course, we're always going to be looking for clues to what might be happening in the future. But right now, no policy changes are expected as signs of recovery, increase in clarity. Tesla stock dropped by 2% after their announcement of earnings per share. Even though their earnings beat expectations, a little some concern over the auto sale industry as far as Tesla is concerned. As far as other earnings this morning, UPS, the shining star, beating on both. Eli Lilly missing on both. GE, kind of a split bag. Really some big numbers coming out this afternoon. On the docket that I'm looking at, we have Microsoft, Google, Visa, Starbucks, and Texas Instruments all due out after the close. So we'll be probably thinking maybe some kind of hurry up and wait in some of these markets today because we've got a lot of information due out. Don't forget, the markets are also anticipating a speech by the president tomorrow evening. VIX down 17.32, down 2, I should say, a little bit lower at 1732. The dollar index up slightly at 90.92, and the 10-year yield flat at 1.57. Of course, waiting for news from the FOMC. As always, make sure you smash that like button. Make sure you share, comment, question, feedback, and heckling are, of course, always welcome. Make sure you subscribe to our YouTube channel. Looking forward to seeing everybody. As always, I've got to say good morning. I saw Brian, you win the prize, first one in the room. My brother Rick, good morning. Good to see you. Theo, Ralph, Bill, Richie, Will, James, Caesar, Vince, Subconscious. Haven't seen you in a while. Good to see you. Rob T, John Huckel, Murph. Going to Vegas this week. Nice. Have a good time. Enjoy your time away from the markets. Have a good time. Get some sun. Have some fun. Sounds like a great idea. And of course, yes, make the most of today. Shady Trader, have fun. Yes, Murph, Ram, Andres, Lamus, Murph. Yes, he'll be playing poker. Colin, the chef Magianes is here. George Ashton, level 2. Good morning, Zaddy. Trading Research, good morning. Greg, John Doherty, always good to see you, my friend. Jace, Sharon, good to see you. Vicky, good to see you. Yes, all is well. I've got my little bit half a cup of coffee here, and looking forward to an interesting and challenging trading day. I'm going to put the link in for group coaching. That is tomorrow. Unfortunately, it is right when the FOMC announcement comes out and overlaps the Fed chair press conference. But that's okay. We're going to do it anyway. We're going to start at about 5 minutes late. About 1:05, we'll start group coaching, and we'll work our way through. Murph, I got your email. I've got some pretty decent, really good emailed in questions for group coaching tomorrow. Murph, I saw yours. I'll save yours for next week. And we're going to see what we've got going on in these. Yes, half a full cup. Yep. Yeah, it's my second one today, so it's okay. I'm getting gassed up for the trading day. Although I always have to remember we got to stay patient. A lot of information due out, and That tells me, when the S&Ps yesterday, it was such a hurry up and wait day. There was very little opportunity, very narrow range. Nasdaq was a little bit more directional. We're going to take a look at those charts here very shortly. One of the more interesting things that we saw yesterday morning was the creation of a head and shoulders that played almost right to the tick of expectations for a potential profit target for that. We're going to take a look at that here as we move on to the charts, which apparently I've done something to exorcise the gremlins. They've been solid all morning. Let's see if we can keep that going on. As far as crude oil is concerned, volume yesterday off the lows. Okay, here, remember we were kind of looking at this trend line yesterday morning as a potential area of support, and we did bring in some pretty decent volume off that level, and we added 7,000 in open interest off that level. We're still really centrally located inside weekly kickoff high and low, 64 the high, 60 and a quarter the low. We're, of course, waiting, as always, on Tuesday. We're looking for information from the API this afternoon, as well as the EIA tomorrow. Centrally located, I'm going to be looking for opportunities to use short time frame levels, unless there's a change, unless something happens, using short time levels for my opportunities. So the market opening, I'm going to surmise with a gap this morning. So already we've got... the opening range, the low of the regular trading hour session. All right, that's going to be something that I'll be keeping an eye on here. You're just going to call that out. 62.41, the low of the opening range, price moving higher, settlement down here. We've got overnight longs in this market. We've opened with a gap. We can't close the gap. We look for opportunities to go in the direction of the gap, which could push us higher. If we were to pull back and kind of reconcile some of these overnight longs that are in the market, this area right here, the point of control, the settlement price, and our overnight low tightly packed together, looks like a kind of a target-rich area for me. So if the opening range falls and we close the gap, that'll keep me patient until I find, again, short time frame levels with which to look for opportunities. Right now, opening range, the low of the session. The only thing I'm thinking is, if we continue to see buyers come into this market, if they're in control from the open and maintain control through the day, we could quite possibly see this market go considerably higher. But I'm not thinking it's going to be a big event today because, again, we're waiting for so much information this week. API, EIA, FOMC, all of these things affect demand for crude oil. So I'm going to, if I'm not in this trade, I'm going to try and stay patient. Can't close the gap. Look for opportunities to buy the market on weakness. S&Ps. It's the little index that could. Just continues to grind higher. Just continues to grind higher. Volume dropped yesterday. Okay. Again, that's kind of to be expected. We've got a lot of information due out. It's kind of a hurry up and wait kind of day yesterday in the S&Ps. Volume dropped. We did add some open interest on a move towards the all-time high. We are kind of approaching that big fat round number, that weekly kickoff high, 4,200. It's a big fat round number. If traders have their eyes on that, that's where price is likely to go. That open interest again on that low volume, but that open interest in a very range bound day yesterday indicates there's still interest in coming into this market. We're holding an upside structure. We're kind of breaking out the top of the range that we've been in. So, anything is bound to happen, and like yesterday, not much did. Take a look at where we are. This is Friday's emotional upside move, value high, value low. The range yesterday, value high, value low. The market is kind of closing in on itself, and it's going to be beneficial for opportunities as the week goes on. Seeing that additional open interest come into the market yesterday tells me, there's a potential for a move coming down the pipe here. If we keep adding open interest today, tomorrow, it's going to be, perhaps a more powerful opportunity. But as for this morning, I mean, yesterday was really kind of a dud. It was almost a normal trading day, which is the first hour of trade remains the range for the whole session. It wasn't until way later in the session that we just looked above the previous high, looked below the previous low, and then kind of closed centrally located. Settlement 41.7950. And where are we? Well, we got a little bit long. We've reconciled those. We're now in range, in value, not really seeing any reason to get excited about getting into the market. When we look at these whole moving averages and we look at the exponential moving averages, JD's faves, the 20 and the 50 exponential moving average, they're all right in the neighborhood. They're tied up. This tells me that the market is really just waiting for new information, and it tells me to really try and stay patient. Stay patient. Patient. Yes, it's coffee. I don't start doing that until after 10 o'clock in the morning. All right. Anyways, so stay patient. There's really no reason to kind of feel any pressure to get into this market. With all the information coming out, it was a hurry up and wait day yesterday in the S&Ps. We haven't moved. Something changes. We'll look for those opportunities. A lot of unknowns. Earnings, FOMC, president's speech. Lots going on. Take a look now into the Nasdaq. So when I formulated the weekly kickoff numbers, I really had a hard time looking for anything that I could count on other than the all-time high, which is in extended trading hours right here. That all-time high is 14,059.50. I didn't really feel as though that we'd accepted above this 14,000 big fat round number just yet. Yesterday was our second close above that level. Are we going to accept it or are we going to reject it? I'm thinking, there's very low probability that we're going to leave the all-time high in the extended trading hour session, in the overnight session. We could very well reach that, take that out today, and we'll have to see what happens if we do that. Volume held up a little bit better in the Nasdaq yesterday. We added 2,400 estimated new contracts in open interest. So that tells me, okay, volume is at least maintaining. We had a decent move. We added open interest. There's still buyers available for this market, and this consolidation area is probably a big reason why. When we have a pullback, we even inventory. When we go into consolidation, we even out inventory, and then we have the opportunity for the market to have more buyers to come in and move this market. I don't know if you've ever heard the market needs to break in order to rally. If it gets too long, we need to adjust that inventory, and then we can take the next step to the upside, if that is indeed what is going to happen. Take a look at the 30-minute chart here. Much more directional than the S&Ps yesterday. We opened down here. We didn't leave the opening range at the low of the session. We opened basically right at settlement. It was one of those kind of try and stay patient days. If you were able to get into this upside move through the day let me get this back. Let me rein this in a little bit. If you were able to get into this upside move, good. I'm glad. Now we've closed above 14,000, I should say, for the second time. We're maybe holding some overnight longs here. Are we going to open with a gap? It's more likely in the Nasdaq than it would be in the S&Ps. S&Ps are inside value. Maybe not. A move down towards this weekly kickoff level, 14,000. Big fat round number might be a good opportunity. Down towards settlement and our overnight low might be another opportunity for us to look for an execution. But again, with all the information due out over the next few days, it's going to be difficult to I think it's going to be more of a hurry up and wait type of situation. So I'm really going to try not to feel like I'm missing anything today. If I do miss something, that's okay. I know there's going to be more opportunities. Focus on staying in process today, ladies and gentlemen. Stay in process. Use good trading decisions. Make sure you limit your risk and try and be patient. Lots of energy coming into the market over the next few days. All right, so that all-time high, we got within $9.50 of it overnight. But again, that overnight all-time high not likely to remain. So we're going to have to see how this market opens up. If we do open with a gap and there's an opening range trade, there might be something useful for us. Gold. Upside structure remains good. It just seems like with the volume drop off yesterday, very little change in open interest. I think we added like 150 in open interest yesterday. The market just seems to be wondering what's next. What are we doing, and what's the next move? Well, we're still holding upside structure. We're pretty central in weekly kickoff range. Tells me short time levels might be the ones that I'm going to be able to lean on a little bit today. Volume low, open interest moot. Nothing really going on here. Never know when that's going to change. The market did open with a gap. It came back and closed the gap to the tick. Still kind of holding upside structure in the very short time frame. We've got higher lows, we've got higher highs. This move down to the gap close might end up actually being somewhat supportive, as we've got value low and settlement just below that level. So kind of keeping an eye on seeing what's going on here. Value high from Friday is potential. Remember, we're looking for short time frame levels to be respected. The problem with that is there's going to be a lot of them. There's going to be a lot of short time frame levels. If we start to pull back, we've got settlement and value high from yesterday, point of control from yesterday, value low from yesterday, our overnight low. There's so many places to choose from, so many levels to choose from. If we do pull back, I'm going to try and find the best trade location first. If I miss it, perhaps there will be an opportunity for me to lean on short time frame, day time frame structure with which to get into an opportunity. So far, holding largely above yesterday's range and value. We could see some continuation if we can take out the value high from Friday. Euro. This one is cool. If you remember yesterday, well, let's just talk about what's going on. Upside structure remains. Volume maintained yesterday. We did lose some open interest up here. Remember, this 2090 level, this gray line right here, is a line that's it's a previous weekly kickoff level, and we've kind of found some magnetic activity around that level. It is struggling right now to hold price and participation above that level. We close above that level. Yes, we did the day before. We did Friday. We did yesterday. Indicates some perhaps long liquidation on the pushback to the downside yesterday. Now we're back above that level. So looking at the 30-minute chart, here's what we were talking about yesterday. We said, hey, there's a head and shoulders here. And as we were coming into the market forecast, we kind of broke out a little before that from the neckline right here. We talked about, okay, what's a good profit target for if we break out and hold below this neckline? You basically take the neckline to the top of the head. You go from the neckline here. You take that distance in price and you look for a profit target somewhere around here, and look where the market drove us to yesterday. Not only was it a good profit target, it was a good opportunity for us to take the other direction, because we did open in somewhat of a late spike without true acceptance inside value. We might head back towards the upside. We basically settled exactly where we settled on Friday. We're there now. We're centrally located. We are not in any hurry to get into any opportunities here in the euro. Going to be focusing more on our overnight low, as it matches relatively closely to value low from Friday, and our settlement price and overnight high here for our opportunities. And for the euro, for the 10-year, we just did the euro. All right. So prices have kind of range bound as yields have been steady before the FOMC meeting. Volume maintaining yesterday, a little bit higher, not bad. Open interest increased. It added another 10,700. Not a huge number for the 10-year, as it is such a thick product, a thick market. We have an inside extended trading hour range here, indicating, it's quite possible that this could be yet another, like it was yesterday in the 10-year, another hurry up and wait type of day. Take a look at the 30. Very narrow range yesterday. Value area actually just 6 ticks. We've opened in the value range. If we were a little bit short, we have already reconciled those shorts back to settlement. See the market driving lower. It's definitely kind of an interesting area where it's coming down to our overnight low, the range low from yesterday, and a point of control from back here that was already checked, but we've got our overnight low right in that area as well. So perhaps coming to an area of potential execution. If we can't break out below the low from yesterday, below the low from the night before last, we may see this market return back to value. If we continue to drag value lower, that may mean something for us. Crude is very rude this morning, Vince says. Let's take a look at what's happening. Yeah, well, we just took out all of the stops below the opening range. I can see why you say it's being rude. Remember, we do have some considerable overnight longs in this market, so a pullback towards the point of control or settlement is, there's a high probability of that. We opened with the gap. We left the opening range at the low of the session. It was a legitimate trade, no longer valid. Now we just look for our next opportunity, perhaps use the next hypothesis for our trades. All right. So we have a couple of comments here. It is coffee, I promise. Took a long break to break some bad habits, and I'm back now. Good to see you back, Subconscious, and you will see me more from now on. It's good to have you back. Every trader at several points in their year or their career gets a little bit too close to be able to see the bigger picture. When that happens, we start getting away from our strategy. We start grabbing at straws with which to find anything to try and make some money. Sometimes it's a good idea to take that break, Subconscious. I applaud you for doing so. Market stalkers. Hey, I know you. Yes, group coaching, saving traders from trading FOMC. Good to see you, D. Coffee, right, LOL. All right. Crude is very rude. It's been hard to hit the open. Yeah, those opening range trades, they're streaky. The more traders that trade them, the less likely they are to succeed. We've got, oh my goodness, we got 2 minutes before the equity open. Take your deep breath with me. Stay humble, grateful, and creative today in your trading, ladies and gentlemen. Great to see everybody. Thanks for joining me. I will be presenting the market recap this afternoon. Dan's going to be taking a part of the day off, so he's asked me to take care of the market recap. Looking forward to seeing you there. We should also, I believe, be presenting the coach's playbook today, so look forward to seeing you there as well. Get out there and profit, trade well, and we'll see you later.